As a part of crypto trading video series, today I am making third video of that series. Already I made two videos. First video is about the learning how to trade in crypto market, and second video I made last week about the how to trade in Bitcoin, where I have taken a live trading in Bitcoin and I shown you how to place the order, how to do the chart analysis, everything. And this is the third video, and in this video I am going to discuss about a powerful strategy which is most commonly seen in Bitcoin and Ethereum, especially during the US session. US session mean for Indians it is evening time, right? So that is why this strategy could be one of the powerful strategy for people who are into 9 to 6 job, who are a working professional, where they can't trade in Indian market during the daytime. For them, after office hours, this strategy can be one of the very powerful strategy because it happens normally after 6, so they can take the trade. And this strategy is called liquidity grab strategy, and this strategy is part of my new course which I am launching today, that is crypto trading masterclass, and this is one of the 10 strategies which I have discussed there in my new course. And as a complimentary in this video, I am sharing this strategy with all of you. And this new course, crypto course, which I am launching tonight, and that course has got everything you want to know as a crypto market trader. Especially if you are into stock market trading and you don't know how to enter crypto market, then I have discussed everything, start from basics to how to take the trade in crypto, how to do the chart analysis with powerful 10 strategies. And same time, people who have opened Delta Exchange trading account with my link given below this video, there is a special discount for them. If you opened a trading account with Delta Exchange with my link below given this video, then you can contact me on WhatsApp number and we'll share the coupon code only for people who opened Delta Exchange account with our link given below this video. So now let's go to my laptop and let us see what is this new strategy is all about. Okay guys, now let us see what is liquidity grab strategy is all about. This strategy commonly seen during US session. That means US session means it is for us in India, it is around 6 p.m. Around that time US market opens. And this strategy applicable only around 6 p.m. till the US session open. So that means till the midnight, from 6 p.m. till the midnight, this strategy applicable. And this strategy only applicable in Bitcoin and Ethereum or high liquid coins. Next is this strategy is part of one of the 10 strategies which we covered in our crypto course, that is crypto trading masterclass. Now let us discuss what actually liquidity grab means. Liquidity grab happens when price intentionally moves beyond key levels such as previous day high, low, previous support resistance, and trigger retailer stop loss order before reversing sharply and moves in the opposite direction. It is different than fake breakout like this. For example, you can see that from here there was a big move in this instrument, then somewhere here it started facing resistance. Second time again price came and started facing resistance. Third time somewhere near to that level price came, and finally this candle went above that resistance, above that black line, went till here and immediately made a reversal and then made a big bearish candle and big reversal after that, right? So that is what happens. In the live market, it looks like it is going to break this resistance and it's a breakout, but immediately it reverses and end up making a pin bar at some support or resistance. So that means liquidity grab is a strategy where candle doesn't close, candle only goes above that level and immediately reverses. What happens in the fake breakout? Fake breakout, if you know, we discussed in many videos. Fake breakout mean initially breakout happens, it looks like it is going up, then it will stop going up, and then it makes a bearish candle, and then it comes down, and then it goes down. This is what is fake breakout if it makes a breakout and reverses. But liquidity grab, it only wicks goes above or below support resistance and reverses. Okay, so it can happen on both sides. For example, here you have seen it's happening on the upside. Downside also can happen like that. If this candle can come, make a big wicks and doesn't close below that, and immediately it makes a bullish candle and closes like this, that is also liquidity grab. So now let us see why liquidity grab happens. Liquidity grab happens because smart money and big whales. Okay, this is something first time you are hearing if you are not into crypto market. In our stock market, we talk about big players, big institutes and all this, right? In crypto market, there is a term used as a whales. Okay, big whales. Nothing but big players. Here the term used as a big whales. Okay, they need big liquidity. So That means they need big buy order, big sell order to enter big position. You know that in stock market, it is everything about buyers and sellers, right? Every buyer need a seller, every seller need a buyers. So that means if somebody wants to place a 1 billion buy order, then you know that there should be 1 billion sell order also, right? Then only transaction happens. If somebody wants to buy 1 billion order at some specific price, if there are no 1 billion sell order, then order doesn't get executed. So that means there should be 1 billion sell orders should be there, then only transaction happens, right? So that is what big players need, a place where there are big orders are present, and they know that retail traders usually place the stop losses above or below day's high, day's low, above or below previous day high, previous day low, above or below supply demand zone, above or below tight consolidation range. These are the levels where most of the retailers keep stop loss, and big players knows it, so they go above or below it, immediately take the stop loss. So in the live market, it looks like a breakout happening, but it is not a breakout, it's a reversal, and that is what the liquidity grab mean. That means they will grab the stop losses and then they will reverse the market. Because why they do it? Because they know that that is the place where big buy order or big sell orders are present. Now let us see how to take the trade. Now let us see the strategy part, how we can also trade like a big whales, how to take the advantage of it. So as a retailers, we don't know what they're doing, but only we can understand that what is their game plan, and let us see how to take the advantage of it. First, mark the levels and try to identify where retailers have likely kept the stop loss. You know that already I discussed in previous slide. It's normally above PDH or below PDL, above days high or below days low, above the supply zone or below the demand zone, above the consolidation zone or below the consolidation zone. So mark such levels, and after that see price movement before the price approaches those levels. This is very important, because when you know that there is a previous day high, okay, and next day market is trading here, you know that this is where retailers have kept the stop loss. Now you have to see the price movement from here to here. From here, how the price movement happens. For example, if you see that price movement happens slowly, okay, without much big candle, slowly it happens, and then it makes some consolidation, then makes a breakout candle, then most of the time it may not happen a liquidity grab setup, it may happen a real breakout. But sometimes you see that price is trading here, and suddenly from nowhere you will see that sudden big candle happens like this without any consolidation. That is the first signal that it is likely to be a liquidity grab. Okay, that is what I said, you have to see the movement before it happens. Sometimes it can happen with series of candle, or sometimes it can happen with a one big candle like this. Okay, sudden one big candle happens and then it reverses, and that is what you have to see the movement, whether there is a consolidation or it is happening without consolidation. Next is wait for a grab, not the breakout. That means when you are looking for this kind of liquidity grab setup, then you should not look for a breakout candle, rather you should look for a grab, liquidity grab candle. Okay, so that means once you have identified that it is not a breakout, it's a liquidity grab, then you should go for a long or short after the liquidity grab candle. That means the pin bar what you see near the support resistance, that is not the candle you have to enter. You have to enter on a big full body green or red candle. Now let's go to the same chart which we have discussed earlier. For example, you have seen that it was a liquidity grab because there was no consolidation. In the live market, it was a huge green candle and immediately it reverses. So what I was telling you, that you should not go short here just based on this pin bar. You should look for a full body candle. Okay, so if it is on the upside, then you should look for a full body red candle. If it is happening near the support, then you should look for a full body green candle. Okay, full body candle is very important in this setup. So that is what I mentioned, you should look for only full body green or red candle to enter a long or short trade. Next is place stop loss above or below the wick or high or low of the liquidity grab candle or full body entry candle. Like for example, in this setup, if you have taken a short trade on this full body red candle here, then keeping your stop loss above that red line would have been very big stop loss, right? So in such case, you can keep the stop loss above that candle based on what is the risk reward. If risk is too big, shorting here and keeping stop loss, then it is better not to keep stop loss above the wicks. Otherwise, keeping stop loss about the liquidity grab candle is good stop loss, but based on risk reward also. Target 2 hour on next important support resistance. So this setup commonly seen in 15 minutes or 1 hour time frame chart. Now we'll see some real examples where this setup happened. And the first example is, this is the Ethereum chart. You can see that this was the previous day low, and in the Asian session and European session, market was trading in sideways, and then sudden big fall happened. Then first time it took the support and went above. Then one big red candle came, went below that support, taken all the stop losses which were kept here, then immediately made a reversal and made a big move, right? So this is what the liquidity grab candle, that means only wicks goes below the support or resistance, that is the liquidity grab. So that is what, after that liquidity grab, what you will do, you will wait for a full body candle. You can see that this is the full body candle, this is the candle you can take a long entry. Since stop loss is not too big, now you can keep your stop loss here. Now same chart, this is the spot chart Ethereum. Let us see it on the option chart. This is the 15-minute spot chart. This is the 50-minute option chart, where you have seen the entry here on the spot somewhere here. Same thing I have marked on the options chart about this candle, right? This is candle your entry. You could have kept stop loss below that wicks, and there was a big move after that, right? Next chart example based on liquidity grab based on previous day high. This is the previous day high, right? Next day market was trading sideways, and suddenly from here huge move happened, right? Then you know that it's a liquidity grab because there is no consolidation. Candle just went above that high, and then look at the fall, huge fall after that, right? And you can see that which candle you can take short entry. You can take short entry maybe this candle or this candle, because both candles were full body candle, and you could have kept stop loss above that wicks. Now let us see on the option chart. Same chart in the options, what happened, you can see that somewhere you could have taken an entry here, kept stop loss below these swings, and look at this. It was trading around 700, 750 points or around 800 points, and it made a high of how much? Around 5,300, 5,400, right? So that is what in crypto market, when move happens, move can be very wild, especially in options. Okay, and here you can see that this is the Bitcoin chart, and you can see that it was making a consolidation here, and this is based on consolidation range. You can see that there was a strong consolidation here, and then started going down, and look at this huge green candle went and took the stop losses which were above the consolidation. Now where you will take the short entry? Will you take the short entry here? No. Will you take short entry here? No. Where you will take short entry? On the full body red candle, right? Now again stop loss is not too big, so you can keep the stop loss above this wicks, and after that non-stop fall. Now let us see on the option chart. Option chart, you can see that this is the option chart. Somewhere in this candle you have taken a long entry based on the spot chart. You could have kept the stop loss here, and then there was a big move, right? It was trading say around 1300, and it made a high of 4800 within how many hours? Maybe within another 4-5 hours it made a high of 4800. That is how move can happen if the direction is right. Next example, this is based on day's high. This was the day's high, right? After that market was trading sideways, and suddenly one candle went above the day's high, and then it made a reversal, then small candle, and then a huge candle. This candle you could have taken an entry. And on the option chart, same thing. You can see that around this place where move came, right, from this candle around 1300 or 1400, and after that just a big move in the option chart. This is based on days low. You can see that Bitcoin was trading sideways, and suddenly here liquidity grab happened, right? After that next candle was a red candle, but you should not take that long entry here. Then you should wait for full body green candle, because you are now taking a long trade. So this candle could have been entry. Okay, this green candle, what you see, this could have been entry, keeping stop loss below that wicks, and after that big move in the Bitcoin. And option chart, you can see that you should have taken an entry on this green candle, stop loss here, and what was the price that time? Around 600, 650, and it made a high of around 1900, 1950 within how many minutes? Within around 1.5-2 hours. All right. This is another entry based on supply zone. Liquidity grab can happen based on supply and demand zone also, right? Why this is a supply zone? Because of the big fall from here. That means this is the supply zone, right? Above that level, there is a big stop losses above the supply zone. And after that, market was trading sideways, and this candle, huge green candle, went above that, took all the stop losses. Then next what happened? Next, again pin bar, again small candle pin bar, and this is the candle you could have taken entry. This is the candle you could have taken entry because of the full body candle. And where to keep stop loss? If you have kept stop loss here, it would have been very big stop loss. In such case, you can keep the stop loss above that red candle or above the swing high. And option chart, what happened? Option chart, you can see that it was trading around 1000 around that time. After that, within 1.5 hours, it went up to. So that is how move can come when you are right with the direction. Okay. Now you have understood how to take the trade based on the spot chart and the option chart. Now let us see final note. Like any trading setup, liquidity grab strategy is not 100% accurate. It's not 100% accurate or a foolproof method. It can also fail sometimes. However, the real strength of this strategy lies in risk reward structure. You have seen that when this strategy works, how fast option can move, right? Option can move how many points you have seen with a small stop loss. So that is what when the trade works, especially in option, it can lead to large explosive moves as already seen and discussed earlier in the option chart. And that is what trading is all about. Trading is all about losing small when you are wrong and winning big when you are right. So guys, you have seen how powerful this strategy, and you have seen that one common pattern with this strategy is it happens very commonly in US session, because I've seen that US session is very common for reversal session. A reversal session means during European and Asian session, I've seen most of the time crypto market is going up and suddenly it reverses during the US session, or it is going down and US session suddenly make a V reversal. And that's it guys, that's about today's video where I discussed about one powerful strategy which can be very powerful, especially for 9 to 6 working professionals. And as I said, if you are interested, you can go below this video in the description section and you can check my new crypto course, which is a comprehensive course especially for traders who are into stock market trading and they want to get into crypto market. And as I said, if you open a Delta Exchange account with my link, then you will get a special discount for my course. Same time also 2 months discount on the trading fee in Delta Exchange for people who opened the Delta Exchange account with my given link. Okay guys, that's about this video. I'll see you soon with a new video. Until then, bye and take care.